Hey, I'm Adam Jusko from ProbableMoney.com, and in this video we're going to talk about how often your credit score changes. But before we do that, I would ask you to please subscribe to our YouTube channel if you have not already, and if you have already, I thank you for doing so. So how often does your credit score change? Well, it is not an easy answer. It's almost a trick question in a way, because there's not a set answer like once per month or once per week. In reality, your credit score could change every single day. It just depends on how you use credit. And so here is why. Your credit score is based off of your credit report. And every time a lender gives information to one of the credit reporting agencies, then that is going to change what's on your credit report. And in turn, that is going to change the calculation of your credit score. Lenders generally report once per month. So if you only had one lender, I guess you could say that for the most part, your credit score is probably only going to change once per month. But for most people, they're going to have more than one account. And so their credit score is going to change, sort of on a rolling basis, because the lenders don't all have to report at the same time. So it's not like you can say the first of the month is, when all my new stuff comes on and my credit score changes, or the 15th of the month or whatever. The lenders pretty much can report as they want to. They do it usually on a set schedule of their own, but not necessarily a set schedule that is somehow in sync with the other lenders. So that means that every time a lender reports or puts something onto your report, I guess I should say, that is going to change the report, and it's going to change the calculation of your credit score. Now, the other thing to think about is the fact that your credit score can change even when you don't do anything. And so that also plays into the fact of how I'm saying that your credit score can change every single day. And I'll tell you what I mean about that when we look at what the components of a credit score are, because that will make it a little bit more clear. Now, the first and most important component of your credit score is your payments. So if you make your payments on time, that's good. If you don't make them on time, especially if you get over 30 days late, obviously that is bad. Now, the second component is how much you owe. In the course of a month, how much you owe is going to change, especially if you have multiple accounts. So you may have a certain amount of debt, you might make payments over here, but you might buy something new over here, or you might open a new account and have new debt over there. So that is going to be another component that is going to potentially change things. Number 3 is the length of your credit history. That is something you can't do anything about, obviously, but every day, every month, your credit history grows a little longer, which affects your credit score for the most part to the good, because a longer credit history is better than a shorter credit history. The fourth component is your credit mix, meaning, credit cards, mortgage, auto loans. The more things you have, the more types of loans and credit that you have used, the better. For the most part, this isn't going to change very often. You're not taking out a mortgage every month or whatever, but the more you have, the more it's going to, help your credit score over the long haul. But when we talk about, how often your credit score changes, your credit mix is not generally going to be something that, really moves the needle, except for when you really, maybe take out a mortgage in particular. And then the fifth component is new credit, which obviously is something that can happen much more often. If you're somebody that, tends to go after a lot of credit cards, you're going to have new credit going on to your credit report on a regular basis. And that is, something not only that could mean that you have more debt, but even the fact of opening new credit lines affects your credit score to the negative, at least in the short term. So the more new lines you open, the worse it is for your credit score on the short term. And so that is going to impact what your credit score is each day too. So you can see there are a lot of different pieces to the puzzle here, and that is why your credit score can change so often, because there's so many things that can change it, and there are different times that the lenders may be reporting those things onto your credit report. So every action you take is going to alter your score. And with each lender, it's usually going to be, like I said, once per month, but you're talking about a mix of all those things. So you're talking about the mix of the different lenders. Some things are good for your credit score, some things are bad. So you may have, on-time payments for all your accounts that are good, but then on the other hand, you may have new accounts that you open which are going to ding your credit score a little bit. So your credit score, could change a little bit for the better. It could change a little bit for the worse. And obviously, again, it's on a rolling basis as to, how often it's going to change and by how much. Now, some things to remember here. Again, I said, your credit score can change even with you doing nothing. And the number one reason is the length of your credit history, because the longer your credit history, the better for you. And there's nothing you can really do about that. Obviously, once you've established credit for the first time, that's kind of when the clock starts ticking, as long as you keep those accounts open. Now, the other factor that you don't really have control of is the age of your accounts themselves. So after a certain amount of time, if you have a closed account, whether for the good or for the bad, it is going to fall off your credit report. So if you've had credit troubles in the past, at some point those are going to fall off your credit report and they're not going to be seen anymore. But the same thing if you had good accounts that you closed for whatever reason, either you closed them or the bank closed them for inactivity. At some point, those are going to fall off, and then those could, hurt your credit score. So again, another piece that goes in there that can affect your credit score even when you haven't actually done anything. Now, another thing to consider is the fact that because of the, the length of your credit history, the less credit you have had, the fewer accounts you have had, the more impact everything you do is going to have on your credit score, and most likely the more often that your credit score is going to change, because you don't have as many accounts, you don't have as much history, so everything you do has more impact. When you've had credit for a long time, you have a very long track record, every month is going to not have as much impact because you've already sort of established who you are as a user of credit. So if you have a long history of doing well with credit, it's not going to change a whole lot if something, some small blemish goes onto your credit report. Where if you have a very short history and, it may be an okay history, but then all of a sudden you have something bad happen, it's going to hurt you a lot more. And obviously the other way as well. Doing good things are going to help somebody that has a shorter history more than they're going to help somebody that has a long history if that history is not so good. So that is something to remember as well. So your credit score is a combination of, things that you have control of in terms of, your on-time payments, how much debt you have, how many new credit cards and that sort of thing you take out. But then it also, you mix in the things that you have no control over, the passage of time being the biggest one of them. So overall, when we talk about how often your credit score changes, it could change every single day. The more credit you have, the more often it's likely to change, and the shorter your credit history, the more often it is likely to change as well. So that is it. Thanks for watching. Please go to proudmoney.com, where we talk about other personal finance issues, credit scores, credit cards, all sorts of other fun stuff too. Thanks for watching. Bye.